What we see right now, more and more brands starting to use what they name in-house buy now, pay later, or branded pay later capabilities. And there are also many cases when it's a better choice for your business. So first and foremost, in some of the cases, you know about your customers much more, and with easy addition of even a couple of additional credit rules, you can judge about your customers much better than any bank can do. Remember the case we discussed about Shopify. So this is the first thing. So your approval rates will be better, your customer understanding will be better, underwriting better. So this is first one. Second is if you want higher conversion, as we discussed. For example, if it's your branded website, again, as with Apple Pay Later, so you want some Apple product or service, and Apple does Pay Later, it's definitely higher conversion. You will get higher conversion for this Pay Later than if you will do with third-party providers. And the next one, if you want to do more seamless process, so obviously it will be less clicks than go into the third-party website. Then for some of the cases, like for example, if it's seasonal production of some goods and like within a month or a quarter, your product will be outdated, you can even offer very special terms for it. That again, one size fits all, buy now, pay later providers will not be offering you. So they have their own business model for installments and how they split up, and you can actually use very specific ones for your specific business. And then you will not need to pay portion of your revenue to buy now, pay later provider. For some businesses, this is huge amounts, tens or even hundreds of millions. So usually it is between 4 and 6% of your revenue that BNPL provider leaves for themselves. And for you, it can be additional income if you will do it on your own. And then not for all, but for many segments, you can be also subject to client loss, because they can go to competitors on buy now, pay later websites. They can see, in many cases, not in all of them, they can see links to competitor websites. So some of them, especially stronger brands, they reported to us that according to their investigation, they also lose 4, 5, 6, sometimes 7% more through this. And again, as you can see on the slide, if you use classic buy now, pay later providers, you still will get higher revenue, 25, 26% higher revenue on average. You will pay 5% back to BNPL provider, you will lose some of them to competition, but you still get higher revenue. Well, if you're relatively strong brand or very niche, and in specific industries, if you do it on your own, you may have increase in revenue much higher. In some cases, even 40% higher. So you need to consider all these things before deciding how you want to do. Of course, with in-house buy now, pay later solution, you need to manage it on your own. So this, if you need money the next day, this will not be good for you, because you will need to whether to bring it on your own balance sheet or whether simply wait. So it will be deferred payment for you. Wait for these payments on your own. But again, keep in mind that solutions right now, they automated 100%. You don't need to become a bank or BNPL provider, because it will be automated. It will just run it for you approximately the same way as it runs embedded payments. The same way it will run embedded pay later solution. And also please remember, with your own brand, customer loyalty still remains with you.